Hello traders, Cousin Vinny coming to you from theclosingprint.com on July the 12th, 2020. In this edition of your weekend video newsletter, we'll talk about the indices, all of which moved higher last week with the exception of small caps, IWM, the Russell, the London Stock Exchange, and the Nikkei, which were both lower. The FANG stocks, in addition to some of the big cap tech names that we follow, were all higher last week, with Netflix, Tesla, and Roku outperforming. Bond stock ratio is bullish, junk and HYG is bullish. We have the Dow Composite in a sideways range but moving higher on Friday. S&P 1500 remains on a bullish signal, and the XII ARCA Institutional Index is bullish above its 21 and 50-day moving average. Price action is trending. We have sentiment, tick and tick Q continues to give us a bullish reading on the 60-minute time frame. Breadth is improving, volatility is improving. Currencies at the bottom of a range for the US dollar, with US dollar yen in the middle of a range for the past 14 weeks. In addition to what we saw with the British pound US dollar, which is above the 21-day and rising, which was bearish for the London Stock Exchange, which was down over 1% last week as a result. We have bonds in a range over the last 15 weeks. TLT showed a little bullish strength to end the week, with the 10-year yield fading a bit back to the lows of its current range between 6 and 9. As far as commodities are concerned, gold is neutral, looks a little bit more bullish on the monthly time frame, with copper back to 52-week highs. That is bullish for construction-related names, builders, home improvement, and construction materials-related stocks. While West Texas crude remains bullish for equities as long as it continues to move higher. S&P 500 sectors, heat map is improving. Technology continues with relative strength, also in builders, retail, healthcare, and biotech. Most sectors did bounce. We have the XLP-XLY ratio giving us a bullish equities signal, with energy showing the most weakness. The heat map for the international markets continues to improve. China was up big last week, in addition to what we saw with emerging markets, Brazil and Argentina. All of them remain strong, while Japan and Greece show weakness. We'll look at some IBD 50 names in addition to MarketSmith, Growth 250, relative strength stocks, stocks from the Blue Dot Scan in cyan, and stocks from the top volume percent gainers list in green. And we have the Dow Industrials with 18 stocks set up to move higher. Disney looks the best, in addition to the strength we saw in Apple and Walmart. All of them look really good. Bukowski has 3 of 5 red, with his CPI signal half green since July the 10th at 82.6%. That's bullish, with 4 bearish patterns, 19 bullish patterns, and 326 patterns waiting for breakout this week. We're still in day trade mode with short-term swings in mind. VIX remains the key. It continues to drop. That's bullish for the markets. The spiders in the S&P 500 gamma support at 310, 3100, with overhead resistance at high gamma strikes 320 to 325 on the spiders, and 3200, 3250 on the S&P 500 to start the week. Starting off with the ARCA Institutional Index, probably one of the most telling indices that we follow. This is the 75 stocks most commonly held by institutions in their core portfolios. If we look at the stocks on the left panel, we can see names that are very common and most people know, while price action remains between standard deviation 1 and standard deviation 2, running the bands, and for the last 2 weeks producing green elder sticks, closing in the upper half of its daily range on Friday, giving us an indication that institutions are more bullish than bearish at the present time. While the XII ARCA Institutional Index is important, it's only 75 stocks. So if we look at the S&P 500 spiders, we've been in the sideways range for the last 4 weeks. RSI remains above 50. These 500 stocks closed near the highs of the week. above the 9 and 21-day moving averages, as well as the 50 and 200-day. Note that we had a 50 200-day cross last week, which is significant in and of itself. Volume was below average, so even though we did pull back a couple of times last week and test the 9 and 21-day moving averages, we did finish on a crescendo at the highs. With RSI above 50 and MACD above its signal line and crossing, this is telling you that the bears have lost control and that we should look for more upside, barring any unforeseen catalysts that we haven't considered to date. As the market continues to shrug off COVID-19, financial media, politics, and everything else thrown at the markets, we continue to move higher. If we continue this progression from 75 stocks on the ARCA to 500 stocks on the S&P 500 and look at the 1,500 stocks on the composite, S&P 500, S&P 400 mid caps, S&P 600 small caps, we can clearly see the high-low percent on a cumulative basis continues to push higher. This is telling us to be bullish, a crossover or red signal, as we've seen in the past. Back in December 2019, we had a brief signal there again towards the February highs, and then of course at the February high where we rolled over COVID-19. Right now, histogram is above 0, above the signal line at 2, and the signal line is above the red line and rising. Price action closed in the upper half of the daily range and the weekly range for the S&P 1500 stocks therein. We're above the 21-day and the 50-day, 200-day, as we saw on the S&P 500 spiders as well. These 1500 stocks are very important. We can also break them down to look at the breadth, advanced decline for each of the three components. S&P 500 in the upper panel, advanced decline percent on a cumulative basis continues to climb, remains above the 200-day. In the middle, we have the mid-cap advanced decline percent. That's also climbing a higher low above 200. And we also have the small caps in the lower panel, which is struggling right at the 200-day moving average. So if we do continue to move higher and push above this high, we could get a higher high in addition to what we saw on the mid caps and the big caps. If all three of those continue to move higher, that's a big if, this week, then we would expect to see a bullish rise into the end of the seasonally strongest month of the year, especially for technology, the month of July. Another measure of S&P 500 mid caps, large caps, and small caps breadth. This is the advanced decline percent, and what we're looking for are overbought readings or oversold readings. We're right at the 0 line for the S&P 500, mid caps, small caps, and Nasdaq was briefly overbought but pulled back in, so we could see a bit of a move higher on the latter. If we do see some strength this week, we'll be sure to let you know. Looking at the New York Stock Exchange, we add even more stocks, 2,900 stocks traded on the exchange. The composite is 2,000 stocks, but for this purpose, we're looking at the number of new highs minus new lows, a simple calculation. When we're above the 0 line and the moving average continues to move higher, we can see that we're making more net new highs than new lows. Therefore, we're looking for price action to continue higher. Here's the New York Stock Exchange advanced decline. Now we just need to see a higher high this week and for price action on these 2,900 stocks to move above the 130 moving average. That's half a year of data. As we can see, we did that on Friday. So a follow through would be very productive for the bulls. So we'll look for 12,250 to be taken out this week if the bulls can remain in control. That said, we'll watch price action and see how we open up on Monday and Tuesday. If we look at the big kahuna of indices, this is the Wilshire 5000. A little misleading. There's really only about 3,900 stocks in the index, but that's 3,900 stocks, small caps, mid caps, big caps, preferreds, mutual funds, and ADRs, all inclusive. We can clearly see price action is running along the moving average. The cycle, this is the Kopak curve in the lower panel. This has moved above 0. We made a lower low. Now we're looking for this cycle to continue higher. If we break out over the next couple of weeks and take out these highs, then look for 52-week highs in the short term. While we acknowledge that RSI is above 50 and rising, which tells us to respect the trend is bullish, look for a follow through. Unless there's something out there that we don't consider that hits us in the face on Monday or Tuesday. While the Wilshire 5000 weekly is a bit overbought, volume has been increasing, so we can stay embedded up here. This is not a signal in of itself. It's just something that we want to pay attention to. Watching the daily and the weekly, RSI continues higher, suggesting there is more upside potential if we break out above this level. Look for the highs to be tested in the short term. Acknowledging the fact that growth stocks have been outperforming, we did see a little selling towards the end of the week. Growth versus value continues its path higher, so that's telling us to keep an eye on the FANG stocks, Microsoft, as well as Tesla and Roku and all the big cap tech names that continue to outperform. We can see value is starting to see some action here. Maybe we see some buyers with the growth in the upper panel continuing to break out above the February highs, continuing along its merry way. As the Nasdaq outperforms, we see the Nasdaq 100 at highs. Off of the March 23 lows, we are up over 60%. There is a possibility and most likely a bit of a fade first thing on Monday or Tuesday as we focus on those sectors which are in play to start the week. Finally, like last week, we ended the week with VIX, this signal, green and telling us to be bullish, looking for higher highs and higher lows on the 60-minute time frame, as VIX daily faded below the 50-day moving average, continues a series of lower highs. We're looking for a lower low this week. There's always a potential for a higher low. If some news out of left field hits the markets on Monday and Tuesday, we'll play accordingly. That said, a move lower would certainly be bullish for equities in the short term. Additional measures of breadth, NAMO, the McClellan oscillator for the Nasdaq, is starting to hook upward. That would be a bullish tailwind for growth and big cap tech names. In addition to the McClellan oscillator for the New York Stock Exchange, which is hooking upward as well. So if this bottom turn turns into a full-fledged cycle upward, look for a cycle and a follow-through in the New York Stock Exchange and a move back up towards the highs, matching the performance that we saw on the Nasdaq to date. The bond stock ratio between the S&P 500 and the 10-year bond in the lower panel continues its path lower. That's bullish for equities, is below the 65 period moving average on the weekly time frame. That's a confirmation. While short duration bonds, the 1-3 year, in this case SHI, is in a 15-week sideways range, with the 7-10 year IEF also in a 15-week range, at the top of its range, getting rejected last week. While the 20-year TLT, which had been moving higher most of the week, got rejected on Friday at 168, looking for a little pullback to the moving averages. If this starts to move higher, it'll tell you that traders and investors are hedging risk and looking for safety in the 20-year bond. We are overbought on stochastic and MACD's above the signal line and rising. So right now we're at resistance. We'll see how it opens on Monday and Tuesday. British pound, US dollar. One of the reasons for the weakness in the FTSE and the London Stock Exchange last week was strength in the pound, moving higher against the dollar. While the dollar remains in a range over the last 6 weeks or so, towards the low of the range, we have RSI below 50. So this little bit of a downtrend with a 50-200-day cross overhead does spell the potential for lower levels potentially in the US dollar, which would be beneficial to international companies based in the US, but also having overseas operations. In addition to what we saw in commodities, where copper moved right through resistance like it wasn't there over the last few weeks, it is at highs now that we saw back at the beginning of 2020, with the monthly time frame showing a bullish trend. We pointed this out repeatedly, turning prior to the 2009 reversal in the secular bull market that we're currently in since 2009. Copper reversed 4 to 5 months prior to that reversal, In addition to what we saw after the 2016 election, this forecasted a bullish market, especially for building and construction names, home improvement, and building materials related stocks. So look for this follow through that we've seen over the last 4 months to continue as we come up to resistance. If we get through this level, look for this previous resistance at 325, 330. We get past that into the election, that could forecast a potential for economic improvement into year end. Always with the mindset that we could run into resistance as we meet these levels in the short term. Finally, you've got MACD turning up, you got volume increasing, and stochastics moves higher on the monthly time frame. So bulls definitely are in control. With all of the news last week with potential vaccines for Moderna entering third stage trials, I believe. Also with Gilead, some potential there, and some other names like AstraZeneca. All these pharmaceutical companies vying for a vaccine that'll be used throughout the world. That said, gold is a safety trade, and people, when they get worried, will buy gold. We saw a breakout last week that pulled back to the moving averages. RSI remains above 50, so this is telling you to respect the trend. We could see a bounce this week and a follow through. Selling volume on Thursday and Friday, MACD is above its signal line. So right now this is more bullish than bearish, even though it is pulling back a bit to end the week. And finally, there is crude oil, which is a positive correlation to equities. If crude oil continues to march higher and gets through this support level that has turned resistance, we get through the 42.50 mark and get up into the $50 a barrel mark, that would signal a bullish follow through for equities going into the second half of the year. The sector heat map improving somewhat. We had some weakness in energy last week that we've already pointed out. Strength in home builders, media, retail, leisure. Some of the sectors in the healthcare group, large cap, small cap, biotechs, medical devices, pharmaceuticals, healthcare equipment, healthcare providers doing well. We also saw strength in technology, internet, and semiconductors. So look for that to continue. In addition, we saw improvement in some of the international markets, specifically Argentina, Brazil, emerging markets, India, and China, with weakness in Greece and Japan. International markets, in addition to ACWI, the All World Index, the best stocks throughout the world, looks like a breakout looming, a cup and handle pattern. With the South American countries, you can see Argentina at the highs looking for a follow through. Emerging markets look perched to move higher. We got Sweden looking good. Canada at the moving averages looking for a follow through. Germany looks good. We got Italy bouncing off the 21-day moving average. Netherlands looking pretty good. Spain coming off the 21-day. As you can see, most of these look very strong above the 21-day moving average, with the exception of Mexico. Greece is below the 21-day. China, big breakout, gap up, stayed up higher most of the week. In addition to Russia, which pushed through the 21-day 2 weeks ago and followed through last week. Turkey just dropped below the 21-day on Friday. Nikkei was also a little bit weak at the 21-day to end the week. S&P 500 spider sectors also look fairly strong, as we previously mentioned. In addition to transports, which are above the 21-day, sideways action for over a week. We got materials breaking higher last week. Watch some of the names that we were trading in that group. Communications breaking higher with Netflix and Facebook outperforming. Looking for Facebook to follow through this week along with Netflix, maybe after a little pullback. Energy remains the weakest sector. We need that one to pick up. Financials, we got banks reporting this week. In addition to what we saw with technology, internet, and semiconductors, if we see a follow through after banks report this week, that would be a big plus for the bulls going into the fall. Staples and utilities also getting with the program, moving higher. Healthcare pulled back. It is a fairly strong sector. That said, 21-day turning back up. We had a test on Thursday and Friday. And consumer discretionary, a very bullish indicator for the equity market, as this tells you that people are out spending money on things that they don't necessarily need, consumer discretionary. which is very clear in this consumer discretionary versus consumer staple ratio. When this is rising, that's bullish for equities. You can see what it did back in 2019 after the 2018 20% drop that we saw from October into December lows. The markets rallied. This looks more similar to 2019 than it did in February, which tells you what institutions were doing in February and March. They were positioning more defensively as they were buying more consumer staples than consumer discretionary. Now we have the reverse. This is telling you to be more bullish, be open to a follow through into the fall, despite all of the things that you have been hearing the financial media tell you to expect into the second half of the year. Data speaks for itself. Financial media doesn't have your best interests in mind, believe. Here we are reviewing the IBD 50. What we're looking for are stocks that are above the 9 and 21 day moving average, RSI above 50. In this case, Adobe is showing RSI with muscle, meaning it's staying embedded above the 70 level. This is indicating a very strong trend. There's no reason to believe that this can't continue to move higher. That said, we would look for a better entry on a pullback to the 9 EMA. Don't know if that's going to happen. Adobe continues to move higher going into earnings. Volume increasing, showing that institutions are picking up shares and very active with MACD above its signal line and rising. American Tower and some of the REITs took a breather last week. We're looking for a bounce and a follow through. RSI remains above 50. Applied Materials moving sideways in a range. A breakout above 64 would indicate a follow through and a continuation, next wave up. So we'd look to trade Applied Materials. If that were to happen, RSI would start rising, suggesting there's more upside. Look for more volume. MACD's flat, indicating what we're seeing here should be respected with a breakout and continuation, what we're looking for this week. Same idea with Autodesk. A break above these levels at 251 would signal a follow through. RSI is above 50. Chegg continues along its merry way and a nice trend over the last 3 weeks. RSI muscle, similar to what we saw over here. There's no reason to believe we can't continue higher as we're moving in an area where there's no one ever traded the stock before. Very little resistance to bullish price action. Same idea with Church and Dwight. This can continue higher. I would always love to have a little pullback for day trading purposes, but for a swing trader, continue to move your stops higher as we rise. Day traders, if we do see a little pullback to the 9 EMA or 5 EMA, maybe that's an opportunity. Most likely this continues higher this week. Same idea with Dexcom, sitting on top of this very large and green volume by price bar. Above the 430 level, looks like a breakout is imminent. RSI is rising, suggesting there's more upside potential before getting overbought. Dynatrace, wicks underneath these candles suggest that there's buyers right at the 9 EMA. Look for a follow through this week. RSI is above 50. And volume shows that institutions are present. Facebook, looking for a breakout. Similar to some of the other stocks like Adobe, a break above these levels would signal continuation. RSI suggests there's more upside above 50. 9 is above the 21 day, is above the 50 day, and the 200 day moving averages. Volume showing institutions have been very active. Focus Financial been in the IBD at 50 for a couple of weeks now, continues to show bullish action. A break above 35, 36 is what we're looking for. Form Factor, looking for a breakout above this 3250 level. Godaddy showing some bullish action. I typically don't like stocks that are below the 21 day and the 50 day. We're right at the 9 EMA. Look for a follow through this week. Maybe we get through 74, 75 this week. RSI keeps rising as a reflection of price. Gets above volume by price. That's a lot of ifs, I know. But if we do manage to follow through, look for this one to test 52-week highs in the short term. While IIPR, purveyor of climate control warehouses that assist in production and growth of medical cannabis throughout the United States, looking for price action to move higher and RSI to remain above 50. CLAC has been doing very well for a semiconductor. We also saw a lot of action in LRCX on Friday towards the close, looking for a breakout this week. While Netflix outperformed along with Roku, watch for those two to continue higher. A little pullback, it's outside the upper Bollinger Bands. A little pullback would definitely be a better entry. It is showing RSI muscle, which is telling you the strength of this trend could persist. If you're interested in day trading this one on Monday and Tuesday, I prefer Roku personally, as it does appear to be a better setup going into the week. With obvious volume showing institutions are present. Nvidia trending, look for a little pullback to the 9 EMA potentially for an entry. If there's any weakness in semiconductors, hopefully we see LRCX following through this week. Palomar Holdings, note the wicks at the 9 EMA. Bullish action on Wednesday. Thursday, buyers stepped up. Again, Friday, buyers stepped up looking for a follow through. Trend is bullish. RSI is above 50, suggesting we should respect the trend and look for a follow through this week. Penny Mack, this one looks really good. It's been consolidating for the last 4 weeks. At the 21-day bullish action on Friday, RSI's turned up. Look for a breakout. Doesn't move very much, but if it does get going, this could be a good swing if you don't want to have a lot of anxiety. So it has support at the 21-day, very close by price action if you were to take it on Monday or Tuesday. ResMed consolidating, a push above 195 would be a breakout. Consider it for a day trade. ServiceNow has been trending, pulled back to the 9 EMA. Buyers stepped up Thursday. Didn't get all the way back to the 9 EMA on Friday before buyers stepped up. Looking for this to follow through this week. RSI is above 50. Taiwan Semiconductor been showing a lot of relative strength over the last week and a half. Inside day on Friday, RSI muscle. Watching this one very closely. It'll tell us what to do with Intel, AMD, LRCX, CLAC, and Nvidia. If it does continue higher, looking for semiconductors to lead us higher, as seasonally, July is the strongest month of the year for tech. Teradyne, looking for a follow through as well. Buyers stepped up at the 9 EMA on Friday. Same idea with Trade Desk. Note the wicks along the 9 EMA, that's buyers. So a stop below that level. If it breaks out above this level at 471, would signal continuation of the trend. RSI is showing muscle. Viva Systems trending. If you took this one on the breakout back here at 150, you continue to see buyers step up and support price action. Vertex Pharmaceuticals, watching the wicks that we saw Wednesday, Thursday, Friday along the 9 EMA. What happens on Monday, Tuesday? RSI is above 50, suggesting if it turns up that there's more upside and potentially a test of 306 than 310 to 313 in the short term. Workday, same idea. Bullish day on Wednesday. Pulls back briefly on Thursday, Friday. Look where the wicks are. That's buyers pushing prices back up to 195, 196. Closing the week at 195.88. Looking for a follow through and a breakout above 200 this week. Zoom Video continues along its trend. The 9 EMA keeps supporting price action. Since the first week of June, this one just continues to rally. RSI muscle showing that strength of trend, which can continue. Just because it's above 70 does not mean it's a reason to sell. It's just a reason to tighten your stops and take some shares off at highs. Finally, there's Zynex. That was a nice day trade on Friday. Potentially a swing if it does break out and close in the upper half of its daily range on Monday or Tuesday. Additional stocks, you should look at the Market Smith Growth 250 in white, as well as the stocks in green and in cyan. Those were all meeting all the criteria we just pointed out in the IBD 50. Also watch the Dow Industrials. All of these look good. In particular, Disney, which is in green, which is telling you that we're looking for a follow-through in Disney in the days and weeks to come. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast, so be sure to look for that in your inbox. Otherwise, just keep in mind that SPY and the S&P 500 gamma support at 310, 3100, and we're looking for 320, 325 to be tested this week on the spiders, and 3200, 3250 high gamma strike on the S&P 500. Take care. Have a great weekend. Hope this helps, and we'll talk to you soon. Ciao.